So ladies and gentlemen, welcome to this session on using analytics to optimize audit. Uh, my name is C.A. Narsimanilangovan. I'm a practicing chartered accountant. My area of specialization is technology. In the past, been able to help various professionals, clientele, and various members in the domains of technology. I moved into this interesting domain a few years back, and I find it very, very exciting. And I ensure that I stack up my qualifications as well. Just to give a context, I got another qualification recently during lockdown, Certified Data Privacy Solutions Engineer from Osaka, USA. In addition, I also finished 3 other guidance notes which I was authoring for the institute. Digitizing CA Practice was a book which I authored. I had co-authored the DCMM. DISA 3.0 module 6 I've authored. It is expected to come out very soon. Virtual guide for accounting firms, I had the opportunity to co-author it again, and a technical guide on Internet of Things. So these are all few of the things which I've been able to contribute. And very, very important is, the learnings which I have in every session, everything which I do. This brings me a huge amount of, confidence, a potential that I have to do better, and, always keep on learning so that I'm on the curve. General disclaimer, the views and the technology, whatever I'm going to discuss, my dear friends, are more from a conceptual and educational purpose. And since, I'm also a partner in my firm, Ken & Co, just, keeping both the things aside, just giving a general disclaimer. So when I was thinking and speaking, thinking what could I probably speak on? How do I devise the agenda? So it was just thinking, probably I'll stick on to this. What are the concepts and practices of data analytics? So most of you would have heard concepts and practices of mathematics, statistics, algorithms, a lot of things. But I thought I'll generally give you a concepts and practice of data analytics, but very important, I will relate it to the finance domain. Because the domain of analytics is very, very vast, very, very vast. So you will have to, decide where and how you want to use this. For instance, just like, it's like a do-it-yourself. Data is available, tools are available. The question is what you want to do, correct? You make your own. Just to give a context, a week back or 2 weeks back, we had Ganapati Bappa Moria, correct? We had Ganesh Chaturthi. And all of us, this time it's been fairly mixed, in terms of how it has been celebrated, etc. But something which all of us probably would have noticed is there were a lot of do-it-yourself Ganapati Bappa or, do-it-yourself idols, where clay, plaster of Paris, etc., people started training how to do it. So that gave me a thought process. And that gave me a very interesting insight. The world is actually heading into what is called as a DIY world, which means everything you want, you prefer doing it yourself and experimenting. Let's take an example to get this. And this is the trend with millennials as well. This is a trend which is catching up. Let's take an example. During this lockdown, I wanted to make, let us say, a favorite dessert, a pastry, or for that matter, even a favorite savory. What did I first do? Went to Google, went to YouTube, searched 3, 4, whatever I liked best in that, whatever looks feasible, I experimented it. This is the first thumb rule which I want to take away. I want you folks to take away from today's session. Experimenting is the only way in which you will learn analytics. And for which data sets are available. Data sets are available in our own system. You will be surprised that in our own system, there is so much of data sets which are available. Okay. Even Tally for that matter, my dear friends, is a huge data set. Correct. So therefore, a lot of tools are available. The question is only how you optimize and, sort of take it up. Let's go to the second bucket, the systematic approach to analytics, what I wanted to take you through. Now, if I have to start analytics from, a very, very clean slate, I'll also take you through that, how you can do that. The third is what are the different techniques of analytics which we can use, various technical parameters. Then I thought I'll also give you a demo. What I've done is, I have a few screenshots and I also have some live data. I will make it a combination of both of them because some of these functions take a little longer. And generally when you're doing a screen share, it takes much more long. Okay, so just from that angle. And I'll also give you what is called as practical case studies on analytics for assurance and compliance. I'll take up one which is always my favorite, which is procurement audit. And I also happen to share these insights with a few of my training sessions, DISA batches which I've done, and I got a lot of interesting ideas. And last is probably one slider to just give you what are a few practical tips if you have to start using analytics. What is it that you look at? So that's a broad perspective of where I want to take you, friends. And let me quickly jump into this context. Okay, just to give you a perspective, my dear friends, just to give you a perspective, let me be very clear. I'm not going to speak anything about introduction, what is analytics, what is basics, etc. So if you want to, those are separately covered in sessions. You can obviously visit YouTube today. YouTube has become a university of its own. So introduction to analytics is there. Getting started with data analytics, all of these are available. You can just search it in the YouTube channel, you will get it. I want to take you through, a few more things. Of course, I will have a tinge of fundamentals just to give from a recap standpoint, but I'll definitely jump into more practical thoughts. The first is, concepts and practice of data analytics. Now, if you start looking into the concept of data analytics, is not something which just came now. It's been in existence much, much before. Let me go a little on the mythological perspective. If you remember, the financial consultant or auditor for the, Yamadharma Raja was Chitragupta. Correct? I'm sure you'll be able to relate it. Again, I'm always used to giving concepts in a different perspective, but let's try to relate it to the subject. So, so Chitragupta was the person who was probably the accountant, and Yamadharma Raja was to rely upon him. And of course, we have seen a lot of funny movies. What happens if Chitragupta goes wrong, etc. Let's keep that aside. But what is he able to bring in? Let's presume he has a book. That book today is nothing but a laptop. He has some sort of information which talks about each person's history, details, descriptive statistics. Each of them's information is there. Then he also, Yamadharma says that, hey, this particular person, I want some details. Okay. This is all visual. Huh? This is all I'm just trying to create an imaginary scene based on what I've seen. Neither have I seen Chitragupta, neither have I seen Yamadharma Raja, but just to get the context, right? I'm sure some movie scene is going on, and storytelling is the best way to learn any concept. So I'm just trying to my best to give it a try on this shot. So coming back to my story, Chitragupta, Yamadharma Raja says, what is this person or so and so details. Then what does Chitragupta do? He actually drills down to the details. Correct? He says that, okay, this is this fellow's Mr. X's information, and assuming from a credit and debit language, let's convert the sin versus the sorrow and the good deeds. So he has some credit, debits, balance sheet total, and based on whatever request which keeps on coming from Yamadharma Raja, he is able to pull it and he is able to give some analysis. Now, what is this? This is all about how the data is stored. But being Chitragupta, he has magical powers, he's able to pull it. But in reality, the data may or may not have so many attributes. And that is why, my dear friends, we need to understand how can I do the best possible analytics? More specific from an audit standpoint, please keep in mind, analytics, I can take sessions, I can speak sessions from analytics for MIS, analytics for healthcare, analytics for fraud, analytics for internal controls, analytics for internal audit, analytics for IoT, crazy number of things, but I want to stick on to only one domain today, analytics and audit, bring you a perspective and maybe one case study to take you through that. So when I speak about this entire scenario, the real question is, how do I look into analytics? Today, data is in raw form, and the introduction to this was also given by the previous speaker. He did make a mention that what is data, how that world is getting advanced. Data is dump. A simple layman's accounting person's understanding is, the day book itself is data. You can't make anything out of day book. You might be thinking, sir, mere day book may 500 line items I can read it. Imagine bank's day book. Correct? You'll go crazy. Correct? Imagine bank day book. Forget bank's day book. You just take bank transactions. Of course, now it is reduced. cash credit book alone you take off a bank, you'll go crazy to understand what it is. And cash credit alone, if you read, you will not be able to take any decision. You require cash debits also to get some sort of an understanding. Of course, demonetization, a lot of these outliers are there. You can look into the data in every context. Now, this data doesn't make sense. That is why we have closing balance. That is why we have what is called balance sheet. That's why you have what is called P&L. That's information, putting it into a meaningful form. But having put into a balance sheet and P&L, first and foremost, you obviously need to understand a balance sheet and P&L. Finance professionals do have it. Non-finance professional may find it little challenging, but it's not so complicated. At least the overview of balance sheet and P&L. Now, if I'm going for a bank loan, that balance sheet and P&L is converted in terms of ratios, in terms of projections. And that's where you are actually applying some amount of knowledge. Hey, the liquid ratio shouldn't go beyond a particular percentage. Let's say normally, 2:1 is what I generally understand is the maximum acceptable liquid ratio. But if it goes beyond that, some sort of a risk indicator. So where are we using? I have my data set. I am using that data set to derive some sort of a knowledge. Let me go to the third. Insight. Now I know my data set, whatever I've driven the ratios, analytics, whatever I've done a simple thoughts. I have this information available, but that is of no use until unless I have some more information about the company's projections, how well the company is doing, etc. Let's take an example. I had a state-of-art watch manufacturing company, a simple watch manufacturing company such as this, a simple analog watch, not even a digital, a simple analog watch. If you consider an analog watch today, my dear friends, I'm sure you'll understand, it's always a business which will sell. But just look into the industry today. Are people buying analog watches? No. Are digital watches being consumed? Yes. But is that only being consumed? No. Today, the watch requires a sensor inbuilt into it. And that is when the watch is also being, going, or it's been able to sell. A simple thing like, a simple Fitbit or a MI band or an Apple Watch, whatever you can call it. Now, from this entire ratio, assuming you're going for a project finance and I'm a manufacturer of analog, my debt equity ratio is good, but I know that this product may not be great in the market today. I need to have an inference insight, and that becomes action where I take the action to grant a loan, to reject a loan, to fund this company if it's a PE investor, etc. Things like this. So which means the essence, what I'm trying to say is the value of a data which is stored is zero unless you act upon that. You have GSTR 2A data. Unless you have acting upon that to put in some sort of an analytical form, my dear friends, it is useless. Now your perspective is that GSTR 2A data I can only figure out from whom I've purchased. Stop it there. A GST practitioner will say, hey, GSTR 2A data, compare it with the tally data, check whether there are issues, reconciliation, give it as an audit point. Or, a department will say that there is some issue. Another case, a government may probably say, hey, you have GSTR 2A data. In that, I am realizing that this is the amount of purchases you have made through GSTR 2A. But if I go to your income tax records, I find the total purchase is 5 lakh, whereas in GSTR 2A it appears only as 3,50,000. Let's presume 50,000 here and there, reconciliation is there. 1 lakh you have purchased from unregistered purchasers, vendors. Now, if I have to, as a government, if I have to take a decision, that means if you are a turnover, what I will first see, I will profile you, okay? I will identify, okay, you are a guy who has a sales or who has a purchases or who has a turnover, let's say of 50 lakh rupees. 50 lakh rupees of which, your purchase ratio of registered versus unregistered is 4:1. That means my hypothesis is 20% of purchases made by all of those who are selling less than 50 lakh rupees unregistered. That's the hypothesis. And from there, I will start thinking, well, the government wants to have more and more financial inclusion, correct? And I was part of this Confederation of Indian Industries MSME Money Mobility Week, which is going on recently, including today, where I was interacting with a lot of interesting thoughts and ideas. And a lot of this future, including the largest of the companies who are coming forward, the fintech revolution, now all of these folks are saying that data revolution, data transition is what is expected in MSMEs, which means we as chartered accountants have a very important role to play in this bucket. Anyways, coming back to the context, let's look into point 2. The scale of data volume is increasing. The variety of data is changing. I'll speak about it in a few minutes. I'll show you practical information. The question is, are we capturing it? We'll have to capture that. How to capture it, we'll decide that. But let's quickly come back to this particular context. Sorry. So the scale of data volume, the variety, all of these are increasing, and the hype of analytics is always increasing. You ask any fellow, he says analytics, analytics, analytics. That has become like a sort of a buzzword. And it's all about the hype. Probably in few years down the line, analytics will become default. Maybe a new buzzword will come. Like COVID has become the buzzword, in the last few days. After a point, of course, the next buzzword is Sushant Singh Rajput's case. Anyways, let me leave that apart. But coming back, you also have risk, which is growing in the traditional bucket. If I use my traditional audit techniques, risk is actually increasing, and therefore I need to diversify. So now that I have these thoughts in my mind, what are the interesting next steps which I can take? Let's just look into how data sets have grown and look into your own clients. Look into your own clients, or you look into your own friends, or look into your own mobile phone. Look into your own mobile phone. Look at the amount of data which we or our clientele or the internet is generating. Let's take an example, the e-commerce data, especially during COVID. E-commerce is surprisingly gone up at much more higher levels. Okay, and tier 2 and tier 3 cities have adopted to e-commerce. Look at this, which the Swiggies and the Zomatos and the Amazons and the Flipkarts of the world were trying hard to push it. The COVID just as one initiative brought in, correct? Let's look into the product mix. The variety of product mix, the data which I have is very interesting. Especially when you are driving in an online domain or online sales, you know that every time a customer buys a phone, he compulsorily looks in for a mobile phone case cover. Now, mobile phone companies are seriously thinking, should I actually start manufacturing case covers? Because case covers cost is very low. Margin is extremely high. Okay, and likewise your earphone and related products. I'm just giving one as an example because mobile phone is something which yourself understand. Let's take from a Swiggy Zomato example. I ordered idli, or I ordered dosa, and the next best item which Zomato recommends is, why don't you try vada? Correct. I know I give sometimes delicious examples, but let me come back to the context. Consumer preferences. If you see, I am able to identify consumer preferences which are changing. A simple example of consumer preferences is Google Trends. Those of you who are surprised, you can just go to Google it up and Google on Google Trends, and you can see what are the words which are being used. What is India searching? What is, of course, some of them are free, some of them are paid version. Now people are deciding their marketing strategies based on that. Look into industry data. I'm able to publish some interesting information. It could be banks, it could be BFSI, it could be automobile. You name any sector, data is actually increasing. Sorry. A very interesting thing. Competitor data is also increasing, and they are being increasingly sold in the market at a legally acceptable manner. It is not that a person insider information is leaked out. I'll give you a simple example. If I want to identify the sales of my competitors, And all of them are sort of, doing this entire thing through, let's say, Swiggy or Zomato. Now, Swiggy or Zomato has got so much amount of data that they can say, if you are product A, he obviously knows who's your product B. He can give inference and insights about product B's data as well. Which location, where they're consuming, what it is consuming, whether it is being sold, whether it is legal, legitimate, what is the data processing. Maybe when I take a session on data privacy, I'll go deeper into that. Try data privacy is one more favorite bucket of mine where I've been, specializing recently. Okay, coming back. CRM and leads. That's a terrific source of information. Social media posts. Let's presume a video recording on a Zoom, or forget a video recording on Zoom. Let's take a simple YouTube video which has been uploaded. It may be 3 minutes, 5 minutes, whatever. The amount of analytics which you are able to get, any person can get. If you're a paid version, you have much more. If you're a basic version, you're able to get. One of the days I was just, casually browsing through my YouTube channel, and I recently figured out that I had about 1,000+ subscribers. I said, okay, great. YouTube sent me a congratulatory message. I said, okay, fine. I was not really bothered about it, but I said, it's nice. At least, somewhere people are noticing. But then it gave me some interesting analytics, which I did not even know. It gave me information what time people are seeing my videos, what is the average length people are seeing the videos, which part of the video, which minute people are seeing. I was surprised the amount of data which is available. And this, my dear friends, is increasing. Your LinkedIn posts, your Twitter posts, your social media posts are just a huge set of information. And trust me, the millennials of the future, because, in probably 3 to 5 years down the lane, we will be flooded with millennials, youngsters, generation Y, Z, I don't know what more is there, correct? So all these youngsters are predominantly driven through social media. Let's go to ERP, our own safe system. It could be Tally, it could be an SAP, it could be Oracle, whatever you can call it. There is a huge amount of data set which is there. Geospatial data. Geographic based, a classical example, just to give you a context, even though corona is a little negative thing, the location wise statistics, I'm able to identify what is the death, what is the active cases, etc., etc. A lot of contact tracing apps are there. You can identify near that location, etc. And Google Trends, I did speak about it. I'm sure this is one famous chart which everybody has been looking into, ever since you speak about data analytics, but I thought I'll give you a different thought process and perspective. Just to give you types of analytics, normally you have descriptive analytics, which basically says what happened. It's normally historical in nature. A simple example could be a sales report. A GST report is a historical information because it talks about what happened in the past. Now, can you take last 3 months GST data and extrapolate where your sales is going to be in the future? That is possible. Okay, that's something which I'm going to comment on. Then, of course, you have diagnostic data. Let's say you are an automobile reseller, automobile dealer, and you realize that, the sales have been fairly bad. Your curve gives you a U shape or, a declining line, and you want to understand what is the issue. You double click it, and then you realize that, some cost is there, some issues are there. From internal and external factors, you'll be able to identify a drill down report, segmentation. All these things could be why it happened, and that's what is diagnostic. Okay, just does a diagnosis. And the third, we have what is called predictive analytics. And predictive analytics is what I told you, my dear friends, why, or what is likely to happen, what is the possible lookout. Your introspection. Can I do a forecast? Way back in school, we had this, I think it was the graphs where the green and the red color, you used to take a long scale, put it, y is equal to a plus bx, do a projection. That's exactly what introspection is. That's exactly what predictive analytics, to give you some sort of a trend, what is likely to happen. An example could be post-COVID, many of them are predicting based on what has happened in the last 2-3 months. Then comes your prescriptive analytics. A prescriptive analytics is what action should I take? What should I do? It gives you recommendations. A classical example could be scenario manager in Excel spreadsheet. Those of you who have not used it, it is an interesting tool. Probably some other session when I go a little more into prescriptive, predictive analytics, we will go a little more deeper into that. But for the time being, this is a very interesting case. What actions can I take? It's more recommendatory in nature. A scenario manager is an example. And last is augmented analytics, adaptive analytics. Now people call it with different nomenclatures. It's using machine learning. A very basic variant could be solver in Excel that has been much more advanced using add-on machine learning apps, which is possible. I'm just giving Excel as an example because Excel is a tool which all of us understand and it's pretty uniform. Let's look into this particular dashboard, which is there to get the context right. And I'll bring this to Audit. You'll be able to appreciate it. If I just say that, total TV sales were 2840, that is just data. But if I say there is a 5% increase compared to last year or last month, then we're talking about descriptive statistics or descriptive analytics. I also figured out that, the reason why this has happened is because, brand C versus brand A versus brand A. So I'm going a little more deeper. That's basically diagnostic analysis. Then comes your predictive analytics, where I see that, between January and December, the rate at which it is growing, and, I see a significant amount of growth, which is possible, potential, that could be your predictive analytics. Prescriptive is more saying that, hey, what, probably get started with this, go a little more deeper into it, probably increase the marketing for this, it prescribes action. And of course, adaptive analytics, I don't have a screenshot of that, but it is more to do with, how machine learning can actually bring in. Now you can also see here over brand disease prediction, which you can see in this particular line, which I've written over here. So this is more on the predictive side, rather than sort of a declining trend based on what I'm seeing and things like that. So these are just to give examples and illustrations. Let me quickly jump and move on to a few models of data analytics, and just also to remind you, in case you have heard me speak in the earlier sessions before, my dear friends, my thoughts and my views will be a little different in this particular session, because I thought, every session I need to speak a little different, bring in much more newer ideas. So when you model any data analytics for that matter, you do a lot of analysis, right? The first thing which you do is what is called as a classification analysis. How do you model any data? Let's take an example. You took your GST purchases, you took your GST sales, you just did a summary of that, a simple pivot. Those of you, just to mention what a pivot is a function in an Excel, or for the matter, any of these DA tools, which can summarize data based upon, particular set of parameters. Let's simply call it as a report to summarize. So when I'm trying to summarize based upon a variable, let's say how much of the sales happened within the range of 50,000. How much of the sales happened within the range of 80,000 to 90,000. So all those things are classification analysis. But remember, this classification analysis, the range is a very important factor. Now, how do you decide this? When you're dealing with healthcare related data, a person's weight for that matter, height for that matter, your range would be fairly small. Let's say I'm talking about a company which is doing weight loss management, and they are more concerned about going to the intricate analysis. How many of my participants are, when they joined my academy, they were within the weight range of, let's say, 60 to 65, 65 to 70. But 1 month later, they would measure not 60 to 65, they would rather measure 60 to 61, 62 to 64. So you can see the range being smaller and narrow. Now here the classification which I have deployed is 2 or 5 as the case may be. So there's normally a numerical variable based on which you classify. That's a simple first way of looking. The second way of analyzing the data is what is called as segmentation, sometimes also called as profiling. This is based upon groups, clusters, etc. Now an example could be how many of them prefer a green color or rather let's say a blue color phone versus a black color phone. How many of them prefer a pink versus a red? A car model, a car variant, the car add-ons. So those all become segmentation. You're preparing people into buckets, clusters, a whole lot of these things. Then comes your market-based analysis. This is more into your market basket. This may probably be useful when you're cross-selling the product. I gave an example, when you buy a product, how can I sell a product B to you? And last could be regression analysis. It's more of a statistical model. Again, as I told you, statistical and other things, I'll probably go into one more session. I'm keeping it a little, a little above basic and not highly advanced. I'm trying to keep it an intermediate stage. So statistical model, an equation, y is equal to a plus bx, those sort of variables, which is their relationship between variables. All of these becomes models for you. If you have to take this discussion further, If I'm talking about, now I'm bringing back the context of audit. I gave you a perspective of analytics. Now I'm bringing back the context of audit. COSO, which is one of the most popularly known internal control framework, they speak about two principles which actually speaks indirectly on analytics. And what are they? Principle 11 says organization selects and develops general control activities over technology to support achievement of objectives. So they say that you need to use technology, how you have the controls over it, and organization is free to select, but they need to, as a principle, have a governance. So you have an acceptable method of internal control. You must be careful. All a whole lot of these things. Principle number 13, it also says organizations obtains or generates and uses relevant quality information, okay, for the support of internal function. And here the qualitative aspect is given. And this is where the source of data becomes so very crucial. My dear friends, we always think that data in a simple analyzable form is an Excel or a tally or a ERP data. That is good, but there is a way larger data set than this available. The only problem with that data set is it is highly unorganized, and that is what the data scientists of the world are trying to solve that puzzle. They're actually trying to figure out, can I deploy any analytics model on that? Can I deploy some sort of a process on that? Can I deploy some sort of a intricate analysis into it, and then try to identify? And that's why you all would have noticed that data scientist is one of the increasing role or an opportunity which is there. Okay, in this context, many of them always ask me this question: sir, I'm a chartered accountant, I'm a newly qualified professional, do I go into data analytics or do I go into data science, etc.? My thought process is very simple. If you have interest, go ahead. There's nobody stopping you. But remember, each problem can be solved in multiple ways. If you believe data science is the only way in which you can solve the problem, great. But 70 to 80% of the problems we deal with are probably issues with a smaller data set. And for most of these simple tools like Tally, CAT tools, these can actually solve the problem. Why do you want to go for a machine gun when a simple knife can solve the problem? You cannot cut a vegetable with a gun, right? Saying that, it is used for some other purpose, correct? So I think that is something which is very critical, which all of us will have to appreciate. Now, taking this a little further, there's an interesting study by the IAASB, where they speak about audit quality. The data analytics working group, they said by deploying analytics, your audit quality can significantly improvise. The audit procedures, you can use analytics in each of these buckets, and this is what I'm going to explain in the next few slides. You can use it for risk assessment. I'll tell you how you can use it. I'll give you a few scenarios just for you to get a perspective so that you're able to visualize, and then I'll also show you some data sets. You can use it for risk assessment. You can use it for your analytical procedures, your test of controls, your what we popularly called as your substantive testing. Heavily it can be used, substantive procedures. Okay, and of course, even for concluding, reporting, visualization, all of these things. So it's basically how best I can use this entire thing. And one recommended read for you, my dear friends, is this data analytics impact on audit quality. You can probably Google it up. You will get an interesting report, a small report. You can probably look into it. I'll also give you a few more insights, because the more frequently I speak now, I'm going a little more depth into the subject so that the generic thing is already available in the content. You can always go and try to make my content more curated and specific. Now, if you look into any data analysis, you can bucket them under these three types. Any sort of analysis which you. The first one, we call it as an ad hoc. Now, ad hoc is more, you are doing a trial and error. The first time when we do, always we do a trial and error. Let's say you're doing an audit for a client for the first time. Let's say you're doing a GSTR computation, returns, something for the first time. You're doing an ad hoc. No doubt you have a particular technique which you can follow. You try to apply that technique on this data to see whether it is valid or not. Let's take an example. You were, erstwhile doing an audit of, let's say, a FMCG product, or for that matter, a dealer, let's say, a dealer who deals with oil, spares, automobile, food articles, whatever, a simple dealer, a kirana store, however. Now, the way you look into his data set, you just try to take his overall sales, gross, try to take overall purchases, kacha books, all those things. Now, you try to apply the same technique to, let us say, a larger SME who's having, let's say, about 50 crore or 100 crore turnover. He has organized method of accounting already. This and this may not hold good. But he is using, let's say, a tally. You are able to somehow pull the data. Now, the same thing you apply for a person who's using an SAP, it's going to become difficult. Forget that. Most of you do concurrent audits. Every bank, the data, in principle remains the same. But the way it is captured, the way it is presented varies, correct? And it also depends upon this ERP software which banks use, or other, beg your pardon, the core banking software which the banks use. So ad hoc or explorative and investigating nature. So you seek some sort of a documented conclusion, recommendations, you have a specific query, specific tests. Then comes your repetitive. A classical example of repetitive is your concurrent audit. Once or twice you have done it, you know the process, you set it off. Internal audit, 1 or 2 quarters you do, you know what it is, you set it off. Or your simple GST returns as well. First few days or first few months you do it, and then only if there is a change you come into it. Otherwise you just let your team go on. So periodical analysis, you try to improvise your efficiency, improvise the quality by doing it, deploying technology, etc. The last bucket is something which is continuous. Let's say you attended a webinar on GST somewhere and you realize this could probably issue which was not addressed by anybody, and now you want it to be addressed. So therefore you deploy a new item into your checklist. You realize, assuming, let's say, after listening to this webinar, a new way of doing a particular report, you go ahead and get started. So that's all what is called as continuous scripting, auditing, and monitoring. So there are 3 buckets again. Now, this is very important for you to understand how you should be positioning your time, your skill sets, etc., so that you're able to get this. So that was, a few introductory and, the initial parts of it. Now I thought I'll go a little more deeper into it. What is my systematic approach to analytics? How do I embed analytics into audit? And for this, my dear friends, I thought I will give you a few analytics processes. And any analytics, each of these analytics has different perspective. Each person says, different things. But the very important thing is, first and foremost, what is the purpose of you using analytics? It could be some basic thing, I want to improvise my efficiency or whatever it may be, but there will be one underlying truth which you want to identify. So first define the question. Once you're done with that, jump into it and do I have the required data? Now, getting the data in the required form itself requires a lot of effort. So clean and normalize the data, because the data may have some sort of a skewness. The data may be subject to some sort of a, let's take an example. You're comparing COVID data with non-COVID data. When I say COVID data with non-COVID, I'm talking about during the COVID period versus the non-COVID. So the data during COVID is fairly skewed. For example, you are doing a valuation of a company, which is a technology-oriented company. Sorry, which is a technology-oriented company. And when you're doing the valuation of a technology company, which is more from a perspective of, let's say, something like a Zoom sort of a platform. So obviously you feel that, your sales potential is extremely high. Hang on. It will be high for a few years. It is not expected to be high for perpetuity, because Zoom after a point in time will have a competitor who will outclass. Probably augmented reality will come, and people may prefer having augmented reality because it will look as though I'm speaking in front of you. You just wear your glasses and, fancy things are happening. I'm sure you would have seen that, videos which are circulated on, social media with respect to Reliance, AGM, a lot of interesting things happen. Coming back. So you need to clean and normalize the data, bring it into the context. Next, analyze the data and understand the results. This is a very important thing. And this is the core region or core place where you use this analysis. And last, my dear friends, communicate the results. Communication is very, very critical. Why? The way you communicate matters. How you communicate matters. If you give in rows and tables which are very, very boring, I'm afraid people may not be able to appreciate. That's why people now have come up with some solutions where even your tally data can be put into, interesting charts, etc. I have a sample use case, and let me see if I can also share that. Now that I know this obtain data, clean and data, analyze the data, that looks like a very, narrow perspective. Can I go a little more deeper into that step 2, 3, and 4? So that's where I said, let's go into the details. How do I organize the data set? A simple example could be, your data set may have spaces, alphabets, obliques, slashes. You need to clean that sort of a data set. Once you're done with it, you find the central point for each attribute. What is the core thing? Invoice column is invoice numbers. Ideally, it should be serially numbered. There should not be gap. Great. Date field is nothing but the date during which transaction has taken place. It should have a date range, highest and the lowest. And normally transactions should have happened during business days, not during holidays, but exceptions are possible. So you identify for each of them what is the attribute. Then understand the spread of the attribute. I gave you a perspective. The spread of attribute depends on the range, etc. Once you have done this, visualize the distribution of each of these attributes. Can I visualize it? And of course, first visualize in the mind and then into the screen. Because an artist or a magician, or for that matter, an architect, visualizes first here and then it comes to this. Because what is over here is replicated onto the screen or onto the image or onto his diagram or onto his drawing or for that matter onto his creation. Correct? Or it could be a musician. It could be, the likes of the greatest of the musicians. They have something over here and that is basically. So you need to visualize each of these attributes. And then you put up, I would say, pivot the data. Now, when you use the word pivot the data, it not necessarily means pivot tables on Excel. No, that's a very handy tool, but you need to pivot this data. Once you're done with this, identify the outliers. This is a very, very, very critical thing. Because if you remember, go back to our statistics session, you have heard what is called as the normal curve or the bell curve. And you would realize most of the cases, in any sort of a data set, 2/3 of the data is within having a close nexus with the median. It is that 1/3, which is probably in the extreme corners, that may probably be the outliers. Some other data set can have 1/5 in the outliers, 4/5 within the median. So a lot of these things are possible, and therefore you need to analyze this and you need to get the perspective. And then understand the relationship between attributes. You have attribute A and B. Let's take an example. You look into a core banking system. A bank may have a process where invoice or voucher number. Voucher number is unique for every day, which means if I filter voucher number 5, I will get 365 entries. Why? 365 days, voucher number 5 has been used because the software has been configured in such a way it is uniquely generated for every day. On the contrary, if I have, let us say, one more branch, if I have, let us say, one more subsidiary, that means that much more data sets are going on. So I need to understand the relationship. At the same time, my dear friends, you need to also keep in mind, how do I get the, the nexus? A simple example could be, if you look into GSTR 2A data, we know for certain invoice number can never be the same. It's another matter, you add one comma, full stop, exclamation, things like that. But for certainty, it cannot be the same. And then visualize these relationship between attributes. You sort of establish a trend, and then you also try to, look into the dimensional sets and, sort of conclude. So that's basically how you look into it. And why visualization I've emphasized in the last 2 screens is, of course, a visualization can be graphical. It could be even a table. At the end of the day, it's for perspective, because some people prefer a tabular approach than that of a graphical approach. But the question is, what are you trying to communicate? Remember, there is no one size which fits all solution. A few examples, let's look into it. How do I embed analytics into audit? A simple thing. I identify revenue by location, revenue by division, revenue by product line. I identify changes of personnel in key position, legal, finance, R&D, position that. I sort of look into the entries, volume of manual entries versus automated entries. For an example, a cash withdrawal by way of a counter is a manual transaction. A cash withdrawal by way of an ATM is an automated transaction. It has to be there. A point of sales swiping card is an automated transaction. Correct? A sales recorded through an automatic dispensing machine, for instance, let us say, which is kept in a supermarket or a movie theater. Let's say there is an automatic dispensing machine. These are automated entries which has to be passed. Is there a flag to identify that? Correct. Then comes a very famous, which we always are concerned about, aging receivables. Your balances, your inventory, whole lot of these things can be embedded into our audit. Vendor management, number of vendors they have, volume of transactions, procurement card, purchase order procurement, average days for customer payment. You have a whole list of it. And again, as I told you, I will try to take a few sample tests and try to apply it into our audit. So how do I embed analytics into audit? What are the phases? I thought I will share a few phases, how you can bridge both of them together. And that's my entire thought, which I've brought in over here. How can I bring both of them together? And that is what I'm trying to attempt to here. First and foremost, you can use analytics in risk assessment. What is your historical trends indicating? What is your past behavior showing? Is there some sort of a target group which I need to audit? Is there a risk rating or a scoring? Let's go into a simple example. You've been doing an audit for a client for the last 2 or 3 years. You realize that the historical trend is during the month of September or October, when there is Diwali and there is a peak season, and it so happens that things just rush. You have jumped, you have a lot of things to do, a whole lot of these things happen. So historical trends indicate otherwise. Identify target groups. Normally the sales between 500 rupees to 5,000 rupees is where you have a lot of potential of mismanagement, fraud. Or the sales between 1 lakh to 1 lakh 25,000 always give you an indicator that they have a lower recoverability rate. Beg your pardon. Correct. So risk rating, scoring comes into picture. Then based on your risk, you do your plan. Can I attack high risk items? Can I look into highly severe items? What is the extent to which I need to go testing? For example, I told you the bucket of 500 to 5,000, I may have to go much more deeper. But if I have to choose a different bucket, it all varies. Can I do a sort of a test data, simulate it, so see what the patterns is? Going to the next one. How do I embed this audit into my next phase? Field work. This is where maximum you can use it. And in fact, it's already being used. What I'm only suggesting is please use it in the other phases as well. And in case you're not using it in field work, probably get started. How do I interpret large data? How can I extensively apply CAT tools? What is the risk identified? What are the controls in place? A whole lot of these things comes into picture when I embed analytics into audit. Then of course comes our favorite, reporting. Wow, how do I report it? How do I summarize it? How do I give detailed reports with drill down capability? A simple example. If you see all this, my dear friends, an Excel sheet can do all of this. An Excel sheet can do all of this. But what is the time taken? Some functions is very quick, great. But some other functions takes so much of time. There are 5 to 6 steps you need to do before you come to the conclusion. Whereas if you use CAT tools, that is definitely much, much more faster. Okay, so that's basically what is critical from a reporting standpoint. And of course, using of charts, interactive maps, I'll speak about this in the upcoming slides. And last is monitoring. Now, are there avenues for automation? Let's take an example. You built up a simple analytics. These are the 5 checks which you have to do. Every time what you do is you just go to the data set, refresh, you just check all this, whether it's there or not. It's some sort of a monitoring method. It's like a dashboard. If anything goes bad, you have an indicator or a risk. Correct? One can imagine like that, the petrol indicator, the fuel indicator in our car or your bike, beyond a particular level, it comes into the red. So quite similar to that. The nature, the timing, the extent to which you have to do the frequency, all of this comes under the monitoring. And last comes your continuous improvisation. Can I improvise it better? Can I do something better? Can I bring in dashboards? Can I bring in real time? Now, all of these are how various phases you can embed analytics into audit. Okay, and that's the core thing which I wanted to take you through, in addition to the practical insights. So that completes the second section which I wanted to make a mention. I know I've taken a good amount of at least 45 odd minutes to give you an overview on thought process, but that is very critical. Let's quickly go into different techniques of analytics. A few examples which you can see here, which I'm going to demonstrate it live. Calculation of statistical parameters, classification to identify patterns, stratification, digital analysis using Benford law, joining different type of data sets and trying to establish the relationship between them, duplicate testing, identify if a particular data set is appearing multiple times, gap testing, numeric values to check the control totals, validating data entries, a lot of these procedures are possible. So that's basically what the sample and a sample of analytical techniques. These are not sampling methods, a few analytical techniques. Okay, so let's quickly go into the demo of various analytical techniques which I'm planning to propose, and therefore I will be using the two tools over here. One which most of you are aware, which is an Excel sheet, how best you can do. I'm trying to compare and contrast this also with another data analytics software called as ACAT, developed by Infer Insights. That is just a tool which I'm using here, so that you're able to visualize and get a perspective that how both of these tools are comparable. What is the advantage, or what is the unique thing which you get it by just looking into these two tools per se. Okay, so the first thing which I'm going to look into is column statistics. Before I get into this column statistics and what it is, first let us look into some sort of a data set. I am quickly jumping into sales data, and I'm presuming you are able to see the screen, which talks about 6 to 8 columns. In case you're not able to see the screen, drop a message in the chat window. Otherwise, I'm presuming everything is all right. Okay, so okay, just give me a minute. I think my Excel data is hung up. You'll have to give me a minute. Let me just pause the sharing for a second. You'll have to give me the benefit of doubt, because sometimes when I'm using these tools, or I'm trying to share the screen, sometimes it gets hung up. So I hope I enjoy your benefit of doubt. In the meanwhile, let me try to quickly fix this. Yeah, I think I was able to fix it. There was one small issue there. So I hope my Excel sheets are visible, and the sheet is called as the sales data. Now let's say you got this information from a client of yours. It talks about sales, invoice number, name of dealer, receipt date, etc. And it gives you in this format. The real or the bigger challenge for you is that this sheet, no one has got a lot of interesting information, but how do you draw insights from it? Correct. And if you also look into it, the date column gives you a lot of very hypothetical, or you're not able to make sense out of it. So the first and foremost thing what I will do is I will convert this into a date format, which all of us know it. So I just use a control-1, convert it into a date, and I just choose this, and I say please repeat this over here. I use a function called control-y, and I also do what is called as holding period. So I say holding period is equal to this minus this. So roughly I know 208. I double click this and I have this information ready. Alternatively, I can choose to have a table. It gives me a quick perspective. Now, this is the data which I have, and this is something which I want to analyze. The moment the data comes to you, the first step which you do in any sort of analytics is try to understand the data. And for that, what you need to do is you go through each of these columns to see what is the relevance. Of course, I've given the data in a very, very curated manner over here, but in reality, you need to understand this clearly. So let's go, for example, I go to sales date. I know the sales date. Let me also zoom in, my dear friends, so that it's clear. The Sometimes in a smaller screen, it's a little difficult for you to see. So if I see the sales date, it says it is the year 19 and 20. Now, how do I conclude this? Do not think that it is financial year 1920. Unless you click on this plus icon, you get to know it is starting from April for 2019, and for 20, it is ending on March. So therefore, I know this is okay. Because many times what happens is when you ask the client to extract data, they might extract it till date and also give. And then you have sales information, and if you see here quickly, you have a lot of range over here, and it running into numbers, different sets of variables. And then you obviously have your invoice number, correct? An invoice number, it looks to me that your invoice number is sort of a 4-digit number, so which is fine. Then I have the name of the dealer. Then I have user ID, which is again interesting information. If I do a quick look into user ID, I have some, about probably a few people, not many of them. Then of course I have receipt date. This runs into, look at this, 19, 20, 21 also, some people receiving in the next year as well. Maybe it could be potential receipt date. Of course, I've modified this data set, so let's not question that. Then you have region. It says, you have northeast, west, south, and probably central. You have product type, you have color, and you have units. Now you have this entire thing. So now if you use a traditional method, what I did, my dear friends, I tried to understand each of this column, and I understood what attributes fit in each of those columns. This is nothing but understanding the statistics of each and every column. What are the interesting features? A simple way in Excel which we use for the statistics, because I've inserted a table. The beauty of Excel is the moment you have inserted a table, my dear friends, is that you can click on this table, click on table design. You have this option called as summarize. Just give me a minute. I need to click on this numerical value. Okay, table design, and I have. Of course, summarize information is already there, correct? Or I can simply choose to, put in alt is equal to, so I get the summarized value. And the beauty of this table feature is it gives me all of them at one shot. So I want average, I can get the, what is the average? Sorry, count, average, count of numbers, maximum value. Can you see how simple I am able to do a simple data set validation? Minimum value, standard deviation, variance analysis, and if required, more functions are there. I can figure out if I have to, sort of look into a lot more functions. So this gives me a thought process at a very, very grassroots and a very quick level. I get it in one shot. Not just this, I can obviously filter and sort, etc. But the problem is, if I have to generate the statistics for the date field, it is a little difficult. It doesn't make sense, right? I cannot do a subtotal, or I cannot use the formula. So in that case, what do? I use a pivot table. So now I can use a pivot table just to get an idea. Alternatively, I can simply use the functions of minimum, maximum, etc. But the challenge in all these methods is there is a series of steps involved, and I'm giving you a perspective so that you're able to understand it. So it takes pretty good amount of time. And why is this necessary, my dear friends? It is necessary because unless I understand the column statistics, I cannot understand what is the data risk and plan what I have to deploy. Now imagine this was the data which you had for you to do an audit. Of course, I've manipulated this, but you want to go a little deeper into it. How do I do it? And that is what we're going to target. So let's say I do a simple pivot. I'm sure you know how to do a pivot table. Just go to the data set, insert pivot. I just pick up, whatever I want. Let's say, for example, I want to know, which model has sold the best. So I go click on product type, and then I go click on sales. I have this simple data which is ready. Correct. So this is at a very, very high level I get this information, but it doesn't make sense for me because I get only total sales. I want to know the count of these sales, how much of these products have been sold. I click on units sold, so roughly I get to know this is the trend. I can put into a graph, etc. I can get it. But can I get all of these at one shot? Can I get, which is the highest, which is the least, which are the products? And that is where I'm using this tool called as ECAT. This ECAT is from a company by name Windsor Infotech, which you see over here. Okay, Windsor Infotech. This is a simple add-on Excel tool, and I find it very handy for the purpose of audit. There are hundreds of tools in the market, but I thought, instead of speaking about this tool, that tool, etc., I thought I'll speak about the functions at the end of the day. That is what we are looking at. And this function which I'm going to look into is called as column statistics. It displays the column-wise statistics of whether it's numeric, date, or character columns. So let's quickly jump into this. I will go to this particular tool and I just click on identify, or rather, okay, before that, this tool has got various options, something to clean up the data, something to profile the data, something to analyze, something to investigate, and some bit of documentation, etc. So I go click on details and I go click on column statistics. And the moment I click on column statistics, it sort of tells me which is the column which you would like to analyze. And if you see very carefully here, it says numeric, date, and character. What is it that I want to analyze? Let's say for simplicity's sake, I select all the numerical fields and I want it to give me all these analysis. So I just say select all numerical analysis and I just say, okay, hopefully it shouldn't take too long. Because the data set is a little smaller, it takes a few seconds and it populates it and it tells me what is the data I'm talking about, what is the overall data set, and it gives me a thought process. Hey, you know what, you have 4 numerical information, which is holding period, invoice number, sales, and units sold. The average of positive records of holding period, hang on, it's not relevant for us because holding period is the number of days for which you have held it. Invoice number average doesn't make sense, but sales average does make sense. Unit sold average 3.02, maybe it doesn't make so much of sense, but I'll come back to it. Average of negative records is null, so it's an indicator that my data does not have any negative variables. Average of positive records, look at this. Oh, sorry, number of positive records, beg your pardon. If I look into the number of negative records, the answer is 0. If I look into the number of positive records, I have 6666 holding period. Invoice number is 6663. Sales is given 6667 and units is given 66. So if you see, there is no consistency. But I find only one difference between all the three, and that was because in sales, if you remember, I added the sum total formula, so therefore it is considered. But invoice number is 6663, whereas holding period is 666. So that means there are 3 cases where invoice numbers are not there. Correct? You get a thought process at a click of a button, and this is the power of using analytics at a high level on your data to get it. Remember, the beauty of analytics is you can use it the way you want it. You can either get a eagle or a bird's eye view. You can either go into the finest of the print in terms of, a few intricate analysis. For example, I realized that, 6667 minus 6634 4 data sets are not there. I can, sort of sometimes drill down it, etc. Again, I don't want to do too many functions over here, but I'm just giving you a thought process. Next is the distinct records, which I have 361 holding period. Distinct records, very important. Distinct records refer to unique values. Look at this invoice number, total number of records are 6663, or rather number of line items is 6667, whereas I have 6650 only unique records. It's an audit finding, it's an audit observation. Click of a button, I'm able to get it. Sales, I have 34. That means what? The value of sales is roughly 34 numbers only. Maybe 5,000 is appearing 10 times, 8,000 is appearing 20 times. So I know it is 34. Number of units sold are maximum of 6. That means it's a distinct records are, distinct records are 6. I don't know how much it is. It may be 1 to 6. It may be 5 to 11, whatever may be the number. Negative records are nil. Sum of positive, minimum value, maximum value. Look at this powerful function. And my dear friends, you can run this sort of a function even in Excel. That is possible, but only thing you need to I'll probably show that, but it takes a little longer and it may not be so much adaptable with in contrast with this. So I've got this whatever you see highlighted, my dear friends, is what is, I think, a drill down. I can just double click on this. it gives me a result saying, hey, you know what, these 4 data does not have invoice number. Figure it out, put it into your save it, create an audit finding, just send it to your client. So just push it into Excel. You just have to rename it. Just push this into Excel, rename this file. So you have numeric statistics, and here you have invoice number missing. And then of course you have your numeric statistics, and very important, please ensure you have the data sheet named as data, and preferably keep that as the first sheet so that you always follow a left to right approach, considering in India that's the format we follow. Likewise, can I apply on other fields? Yes, you can apply. For want of time, I'm just giving you one function to get a thought process. Let's quickly jump into, there's just a screenshot just for reference in case you want, because the presentation deck, you can write to me. I will be happy to share this with you. So we saw what was the outcome. Okay, maybe probably date also I will show you, because the outcome is pretty interesting. So I go back to this tool again, and I sort of click on details. I go to column statistics. And the moment I go here, this time I choose date. And what I will do is I will just choose all date statistics. It's going to take a little longer, but let it run in the background. Maybe we will discuss few other points. Oops, sorry, I think I chose the received date, but okay, let's anyways get the context right. I should have chosen the sale date. Okay, it's not taking too long. Maybe then we'll run it for both the data sets. Okay, so I go to, okay, you can see a lot of add-ons into my Excel sheet. So I use a lot of these things to solve my, repetitive problems. So let's quickly run this once again. I go to the date function, I choose select all, and I choose all the date statistics, and hey, you know what, please run this and give it to me. So I'm saying, okay, Google, okay, software, run this and give it to me, because it saves so much of time. I don't want to sit and break my head in each of these functions. Okay, so it's taking a few minutes to run. Okay, there it is. Look at this very interesting information. So number of records, sale date, I'll focus on that. Receipt date, I'll ignore it. So the first record is April 9, last record is 31st March. So it is within the financial year, whereas receipt date is much more. Again, as I suggest, let's not focus on receipt date, let's focus only on sale date. January, I have 309. So month-wise, I have statistics. As though this is not sufficient, I also have day-wise. Monday, how much sales, Tuesday, how much sales. A lot of this information, number of sales with inconsistent date. And the beauty is I can drill down. All that I need to do is double click on this 309, give it to my article. Hey, you do January, you do February, you do March. Things like this are much more easier for me. Of course, I can do quarter wise also. I have to use a different function. Let me quickly come back to the function number 2, which I want to make a mention. A very important thing: identify duplicates and gaps. Before I conclude before I jump into the next function, a quick recap. You will have to use column statistics in all places where you want to get a look and feel of the data. Priorities, you can use it in risk assessment, in your audit planning. Wonderful tool to a wonderful methodology or wonderful technique which you can follow. Second thing is identifying duplicates and gaps. This you can use it either for your planning and scoping or your field work, depends on where you're using it. In your field work, you're going deeper in data. In your planning and scoping, you're just trying to touch the surface. Both the places it is possible. Okay, so that's basically identify duplicates and gaps. So let's quickly jump into this. The same data set, we already know where we have identified duplicates and gaps. So I want to check the duplicates and gaps in invoice number. So I'm using a spreadsheet approach. I just want to identify this. The first thing which I do is go click on this invoice number. Okay, before that, I have an extra column over here. I'll just delete that to avoid the confusion. Extra row rather, this particular row, I do not want it. I'll come back over here, go to invoice number, click on this icon, please sort it smallest to largest. Okay, so the moment I sort it smallest to largest, all that I have to do is insert a column and just say difference and say, hey, you know what, tell me the difference between this value and this value. That's it. So everywhere the difference should be 1, but I'm getting cases where difference is 0, difference is 2, difference is 3. So what does this mean? This attribute is repeating twice. Here you'll find 1157, but you're not able to identify. So you need to first highlight all of this. I'm just telling you how easy or difficult it may sometimes be. So here I know the difference is 0, so I'm able to get it. Okay, so I'll have to sort of, it's taking a few seconds, so let's just give it that time. Everything in life happens at its own pace. Donald Trump became the president at the age of 60 or 70 plus, whereas New Zealand is having a very young prime minister. So everything takes place in its own time. So is my Excel sheet. So you'll have to wait for it. So the challenge, what we notice or what is identified in this method is that it takes some amount of time, especially when you have data in table, etc. You're dealing with the whatever Excel sheet. What is the advantage is that you are able to do it things quickly, but it has involving 3 to 4 steps. So that's basically what I was trying to communicate over here, where you're trying to identify duplicates and gaps. So for while the Excel sheet is getting ready, I thought I'll quickly move to the just to give you a perspective how the software can do it, or a tool for that matter. You just go click on identify duplicates, click on invoice number, and say, hey, what, run it. It gives you a click of a button. Of course, there's some other sample data set, but at least it gives you this information. It says that these are all the invoice numbers which are duplicate. Can you notice here 1034 appears twice, 1454 appears twice, 1708 appears twice. You can also do what is called identify gaps, numerical gap, and you know that the gap between 1 and the invoice number should only be 1. So it tells you wherever there are gaps more than 1. So look at this. Invoice range 1035 to 35 is not there. 1158 to 185 is not there. 2002 to 2003 is not there. Please note it is inclusive, therefore it will appear two times. So hopefully my data is ready. Yes, it is ready. So if you can notice here, 1034 is appearing twice. I again go down here. Again I have to go search here 1157. Why it is identified as 2, I'll have to read the item beneath, so it becomes quite time consuming. So I go click on this tool again. I say, hey tool, can you please help me identify the duplicates, and this time please identify the duplicates in the invoice number. So I just click invoice number, nothing else, and I just say, all these options I leave that to for you to export it, but I just say, hey, what, do this and just run it and show it for me. It may take a few minutes while it is running it. So I hope you got this context. I'm sure you may have some of the other questions. Please drop it in the chat window or query, or I will share my contact coordinates. Feel free to reach out to me towards the end. Okay. Is the result completed? No, it's still taking a few minutes. Please note, when you share your screen and when you're running these functions, it takes a little more longer. So please give me the benefit of that. The third thing is sampling. How do I create, stratified sampling, and how do I do random sampling? Because all of us are used to, the sampling methodologies where we pick and choose, a random method, whatever we choose. But technically, random sampling means usage of law of random numbers. If I don't use random numbers, then it is not called it's not called random sampling. So you need to please keep that in mind. Okay, so how do I use law of random numbers? Do not bother too much. Excel has a very simple function. Most of you already know it. It's called as rand, R-A-N-D, rand. Correct? It's not too very complicated. You can just run that by yourself. Oh, sorry. The results are here. Okay. Perhaps I was noticing it. So look at this. Identify duplicates. In a click of a button, it says, hey, you know what? These are all the duplicates. And the beauty is I can also, sort of search over here. Give me all those with 1034. It gives me at one shot. Things like this. So it is also fairly dynamic. This data set is fairly dynamic also. You can do a lot of simple analysis if need be. So you do it, otherwise just save it in Excel and go ahead. Correct? So this becomes your audit finding. So you are able to save a substantial amount of time by just doing this sort of a data set. Those of you who do IFC, internal control verification, trust me, this is a very, very simple methodology where you can use analytics and make best use of it. Let's quickly come to sample stratified random sampling. Now, what is meaning of stratum? You remember I spoke about classification earlier, correct? One of the techniques for analytics, and that is something which we will try to apply on this data set. And let me show you how you can use stratum using Excel spreadsheet. Okay, I'm using a pivot. So I go to my data set. or sorry, I go to my insert, I go to pivot, and I just say, hey, you know what, okay. Now please give me how many sales have taken place within this range and what is the count of those sales. Okay, so sum of sales. Look at this, I just choose only one column in my entire thing, and I'm just choosing the count variable over here. Now this looks okay, but I'm not getting a sort of a full visibility. So I know my sales based on invoice value, 38,000 is the first and 2,25,000 is the last, and roughly the number of attributes are 33, which my column statistics already identified. But what I can do is right click on this, very, very interesting feature, click on group. The moment you click on group, it says 38,000 to 2,50,000. How do you want them to be grouped by? I choose, hey, you know what, group it by 25,000. It's easier for me to analyze maybe 4 or 5 buckets and just say, got what. I'm using Excel spreadsheet, it's doing all of this. So now I realize a very, very critical information. What is it? That my sales are majorly classified or stratified, however nomenclature you would want to call it, in these 2 buckets, which you can see on my screen. Correct? And this, my dear friends, is where my majority of my sales are sitting. If I look into the top end model or high end 193, it's very less, just 193 compared to that of this. Now should I want percentage basis, you can just pull this entire information once again. You have count of sales, right click on this and just give me summarize value, show values as a percentage of column total. So I know what it is. And I can also sum total, let me click on sales once again. And this time I will move this data set from here. Okay, it's taking a little longer. Okay, so let me probably right click on this, show value as, so summarize by sum, and please show these value as a percentage of column total. There you go. Don't you think at one shot you can do a ABC analysis combined with a Pareto analysis? Look at the powerful feature. The real question is, have we used it? I'm sure many of you would have experimented it, but these are some things which I realize that, they have a huge potential. You can do a sort of a, ABC analysis, which is combined with stratum analysis. Now, this is where you take analytics to the next stage, a combination of both of this, stratum plus ABC. Of course, here you only get a thought process. You may not be able to go a little more deeper. And should you want some more information, you obviously double click it and go ahead. But if you notice the steps involved did take some amount of time. Now, can I simplify this further? Yes, it is possible. Again, I go back to this tool. I say the tool, hey tool, help me out with stratification. So it is data. It is basically profiling your data. It is stratifying based on a numerical field. Please note it can stratify based on number of fields. Okay, you have aging field as well. I'm just using one for want of time. If it's a workshop, probably there are a lot more things which I can probably pick it up. So I click on this icon here, numerical stratification. It's taking a few minutes for it to load. Let's see what is possible. And I also tell you what is a tip and the pro and the con using this and not using this. In Excel, when you're using, your stratum can only be of one size. That means I chose 25,000, your stratum has to be 25,000. You cannot go beyond 25,000. But you are of the belief that within the 25,000, you want to further bifurcate it only for one class interval, not for the rest. Excel, it becomes a little difficult, whereas analytical tools, you can actually do it. And these are very handy tips. I don't know why it's getting hung up. So let me refresh it once. I choose this tool and I say, hey, you know what, please help me stratify the historical information. Okay, quite surprising. Oh, there you go. Okay, so field to stratify, I am saying, hey, you know what, please stratify the sales field. Field to total, again, I want sales field. Minimum and maximum value, sometimes it applies on its own. It takes, if I click my button, you're able to see this. And it is automatically applied this incremental value. Do you notice this? It has taken an incremental value dividing by the range, etc. So let's not go into that. Let's simply choose 25,000 over here, and let us just say autofill. There you go. It creates class intervals, which you can notice. Probably I think it's sure it's taking a little longer. Why is it taking longer? Or I obviously can choose a free interval as well. That is also possible. Okay, it's taking a little longer. So anyways, as I told you, I've ensured that I've kept a backup plan in place. If I can have an option to choose the minimum and the maximum range, I can either choose an autofill. In that case, it'll create filters, or I can also choose a free interval. So if I choose a free interval, I can choose 500 to 50,000, 50,000 to 55,000, and again 60,000 to 1 lakh, things like that. So I have that freedom. So those are possible. This is another example which you see on the screen over here, stratum. And the beauty is I can double click this and take it to the next stage where I can do much more analysis. Okay, so that's basically stratified input, what you can do. And you can also do stratified sampling. There's another function where you also have the option to enter. So this is a stratified random sampling. In Excel, if you have to do a random sampling, we use a function called is equal to rand. But doing a stratified random sampling is actually a challenge in Excel. It requires a lot of parameters, so sometimes it may create some trouble. So let me see if I can show. So I go click on ECAT. I go to analysis. Sorry, I think I have to choose an audit sampling, right? So I have sampling here. Select, go by interval or by analysis. So you have a lot of possible things on sampling itself. You choose a sample based on interval, you choose a sample based on number, you choose a sample based on total count. You can choose by a criteria. Criteria could be numerical, statistics, by profiling the data. Now, as of now, I'm focusing on profiling. So I'm doing a stratified numerical sampling. And this, of course, stratified numerical random sampling. So you can imagine how much of deviations are possible. One might be thinking that, is it applicable for a small company like mine? I think do not look in whether it's applicable for my company, etc. Look in from a concept. Because many of them, even when I was introduced to, a few of these data analytics, I like, where will I get clients? Why should I bother? And things like that. But what I realized is only when you equip your skill sets, tomorrow, even if any potential comes, or you know how to better represent yourself. It's always like, the chicken and the egg story. People say, other client aayega to mera skills I will increase. Client doesn't come because skill is not there. Skill doesn't come because the client is not there. So it's always going between here and there. So I think it makes sense for us to always double check it out. Coming back to this context, let me choose the class intervals over here for simplicity's sake as 25,000. I just do autofill. I think it had some issue that time. Now I can, if I go click here, I can go and sort of click on free interval, choose what is the data set I want. I can just choose that variable. So for simplicity's sake, let me just run an autofill. I will just fill it up, and you have these attributes. I say okay. So it gives me a simple screen. Hopefully it is giving me, okay, it's not here. There you go. Okay, so here I have overall sampling. Now if I want, I can put it into Excel. I can also click on sampling, and I can tell, hey, you know what, give me a sample. I can also choose sample size or a sample percentage. Interesting, correct? I can choose maybe 5 over here. I can choose 10 over here. I can choose 35 over here. You can make this. And my dear friends, if you're using bank audit, your NPA analysis, your very interesting analysis, you can actually pick it up. The sampling itself, you can do so much. You have sampling based on top attributes. Say, for example, in this group, I want to search only based on top 5 fellows. Let's say you are doing a bank audit. Normally we, as a practice, many of them do this. Each category of loan, top 10 borrowers alone, I will verify for various reasons. That may be your risk appetite on approach. Click on this and otherwise you sit and keep on taking so much of time to identify. Click on this and go ahead. Our work should be more on analytical information rather than doing massaging of the data and a lot of interesting things on that. Okay.
Narasimhan, can I come in for a minute?
Yes, please. Sorry.
Yeah. Yes. It's been going interesting. I think everybody's glued to it. but we have a limitation on time. We're at 12:35. Maybe if we can do another 5 to 7 minutes and then have another Q&A for another 5-10 minutes or.
Oh, okay. So I thought it was until 1 for some reason. I
Yeah,
didn't know.
it's still 1. We are at
Okay.
12:40.
Okay.
The
Okay.
time's gone fast.
Okay. Okay. No, I was just having a timer, but anyways, thanks for bringing that.
Yeah, no problem. Okay.
Okay. I'm just trying to bring you a perspective, my dear friends, on how this is possible. Let me quickly jump into the next bucket, which I was speaking about, Pareto and ABC analysis, in which case, this just to give you a context. What is the Pareto? How do I display it? Things like this, where I can use it. I can use it for risk profiling. I can do it for planning and scoping. So Pareto ABC analysis, again, one interesting thing. An example could be you choose a Pareto analysis, you choose the name and sales, and you can apply the rule. Alternatively, you can apply 80-30 rule, 80-50, 70-30 rule, etc. And you get your output in this fashion. What is 80-20? What are the ratios? So 80% value, what is the bucket? You get these interesting insights. Could be for inventory, ABC analysis 70-30-10, or your 70-20-10, whatever ratios you can just sort of put it over here. It'll help you out. It'll give you those bucketing. You get these stratum. And one more interesting analysis called as quadrant or pattern analysis. All of these are used for risk profiling, field work planning, a whole lot of these things. This is interesting for one of these e-commerce case. I wanted to figure out how much of sales comes within these buckets. Values which are low, price which is low, value which is high, price which is high, value which is a combination of that. Maybe if you see the results, you will be able to understand. So if you see over here, you get various buckets. I'm just trying to show you what it is and see, let's see how the output looks like. I've identified these 4 buckets, and if I realize these are low, that means the quantity is also low. The price is also fairly low. On the other end, you have quantity which is high, whereas the price is low. Now, this could be an example of low could be pencil, stationery, whereas this could be pen drive. A value of each of the product is high, quantity is normally sold has some restrictions, whereas high-low could be again a combination where, unit price is fairly high, whereas the quantity sold is much more lesser. So I should be thinking whether I need to stack up my inventory, etc. And last is extreme case, which you can use it. And if you are an analytics and consultant, you can use this for your BCG matrix to decide what your cash cow is, to decide what your stable income is, various things like this. So that's again one more interesting. One more interesting function is relative size factor. What this does is it expresses the proportion of a value first highest versus the second highest. So that's something which is interesting, which it gives you a perspective. For instance, a material code I want to analyze and identify what is the highest price of a material code and the lowest price. Let me quickly see if I can show that in the data set which I had. I thought I'll show that in the procurement auditing when I'm trying to show you. Nevertheless, I have a sort of a sample things which we have done. So what I also did this time was, I have the results also ready-made. So just in case if my system gets hung up, I can at least show you the results, how it looks like. Let's say I just choose a material code and I want to know what is the highest and the least unit price of each of them. So highest maximum price and the second maximum price. So I just go to this analysis function. Have what is called relative size factor. The advantage of RSF is it gives you the ratio of first highest to second highest. Because if a fraudster, if there is a mischievous person, if there is an entry passed by mistake, you normally tend to identify which is the, he would have passed entry only for one. The second entry would be fairly low. So you get that ratio. So in a click of a button, it can run this and it can tell you, okay, you know what, this is the result where you have material codes. The highest material code is 55. The second highest is 0. This means it looks okay. There's not much of a deviation. Everything is at 55. But as we look here, 40 and 5, there is a huge variance, right? So, okay, my data set is ready here. So if I look into this data set, of course, the values may be a little different. If you look in here very carefully, relative size factor is 10, 5, 14, correct? And it gives you 166 and 16.67. Can you see this difference? 116.67. So what is the meaning? Maybe a sales or a procurement has happened. That person, while keying in the data, that decimal, they made a mistake. 1106 and 190. Maybe he wanted to enter 116 or one of these numbers. Additionally, one digit has come. So all of this in a click of a button, you can obviously identify. So I just save this into my data set. Quickly moving further, a variant of this relative size factor is a maximum variance factor, which could probably be, from max and min, whereas in RSF we took the first highest and the second highest. Example could be material code, unit price. You can do the same thing. Next is a Benford's law. This is more used for fraud examination and forensic analysis. Benford was a statistician. He said that most of the data sets, if you see the frequency at which they occur, or if you see the number of times they occur, or the value which they take, generally they have more number of times they have number 1 occurring as the first digit, lesser number of times number 9 occurring as the first digit. So he brought in a pattern where he said that, if you go by Benford's law, number 1 should occur 30.1% in your data set. Number 2 should occur 17.6. And this is very handy when you apply it on procurement, or for that matter, sales, if I'm trying to apply it. So when I apply this data set, I get to know there's a difference over here. That number 1 is appearing 30% as per Benford law, whereas in my data set, it's appearing only 13.4%. So there's a 16.7% variation. And if you see, equally it is getting offset, or rather to a marginal extent it is getting offset. So if I pick up all those numbers or all the sales which are beginning with 1 and beginning with 3, and I do some more analysis, maybe I may get a fraud pattern. So that is basically what your Benford law can actually be used for. Next is authentication check. This is something which is simple. Let me see if I can quickly apply this on my data set. I have my sales over here. I've just given a different data set over here. I have a user ID, and here I have the authorization limit. So I want to check whether, a very simple thing, whether all these sales which have taken place, which you see in column D, whether am I permitted within the authorized limit. So maybe what I can do is I go to my templates. I have what is called authorization check. And I click on authorization check. The moment I click on authorization check, it gives me a simple information which says, hey, you know what? Compare sales trans file with your sales auth limit file. I say, please match both the user IDs. If both of these user IDs are equal, give me cases of all sales which are greater than the limit. So I just have to choose sales and limit and greater than, and the function is written. By the way, those of you who know what is SQL, this is an SQL function just for your reference. And I just say, hey, run this and get me the data. It takes a few minutes and, sort of runs this and gives me this entire data set where I'm able to do whatever analysis I want. And a click of a button, I get to know these are all the fellows where sales have taken place, limit is more. I can filter based on RA, user ID, whatever, whatnot, correct? So I obviously can save this data set. That's an authentication check. And the last thing which I wanted to make a mention is our own pivot and MIS. Again, used for summarizing data. MIS can summarize by criteria, day of the week, etc. Where can I use it? Risk assessment, field work, reporting. A simple example, give a summary by sales, count of sales, maximum. I think I already showed you a pivot table, how you can use it for stratification. Here I'm using it for a different purpose. But this is something which is very powerful, and this is something which I really like in when I've been using this tool, is the power of MIS. Probably I'll run this, it may take a few seconds. So let me quickly go to MIS. I keep forgetting where this MIS is. Okay. So something which I found very handy is if I forget where this tool is, I also have a feature which I can search and run. Most of the time I use this, I just want an MIS report. I just go search and run. But sometimes what happens is, you know which function to use, you don't know where. If you're not able to figure out where it is, this is pretty handy for me. So I just say, please run based on invoice date and based on sales, and give me MIS, give me all the information. Probably I'll just choose day. I don't want day of the year. I want day of the week. I want month. I want quarter. And I think this should do for me. So let's see what this MIS runs while it's taking a few minutes. It'll give you interesting analysis how much sales have taken place on Monday, Sunday, what is the count sales average, whole lot of these things which are possible. Let me see if this output is ready. It takes a few seconds, so I'm just giving the benefit for the tool to run it. Okay, I don't know where it is. Is it disappeared? Is it there? Sorry, too many things I have on my screen, but all these are just data sets. Anyways, so while that is taking some few minutes for it to run, so that is something which I thought I'll take you through. The last thing which I wanted to make a mention is one case study using, how you can use analytics for giving you that assurance and compliance. And that is something which I thought auditing on procurement I'll give you. This is available in the IIA website, which I was just scanning through. They have an internal audit a process note on using analytics for audit, and they have given how you can use procurement audit step by step. What is the area for purchasing of goods, how you can use it, for receiving of goods, how you can use it, for invoicing of goods, how you can use it, what is the control should be there, what is the data analytics steps which you can perform. So that is something which is quite simple and handy. I have converted that into a simple spreadsheet which you can see over here. Purchasing of goods, analytics is obtain the purchase order data, obtain the list of all POs, what are the CAT tests which you can do. This is something which I just thought I will bring in. Validate that no duplicate tests are there. Determine if POs older than 3 months were processed. So this is how you can actually fix these functions. If I may probably take 5 more minutes, I can show you a couple of sample cases. Hopefully my Excel sheet does respond. I don't know why. Sometimes it keeps creating this stuff. Okay, so I think there is some issue here. I think when I ran that MIS function, I think it took a little longer. So let me quickly pause screen share for a minute. Let me have this thing fixed. If I can do it, that's great. Otherwise also I have some more data where I can show it to you, so nothing to worry. Okay. Okay, it looks like it might take a little longer. What I will do is, let me try to give you a thought process, based on the functions which we saw. Purchasing of goods, what is a CAT test? Validate that no duplicate payments have taken place. So for this, what we do is, sort of just do a summary or, just do identify duplicate POs. You can quickly do it. In Excel, you have a function where you can go click on data, or you can go click on home, and you have conditional formatting, highlight duplicates. This is a good function. If you go to this ECAT tool, you can go click on one of these options where it says identify duplicate values. We already did it. Determine if POs older than 3 months were processed. For example, I can go back over here, identify gaps based on a date, or rather identify maybe here I have to use determine POs older than. So I have to use a aging schedule. So I can probably do an analysis and the aging, and from aging I can actually figure it out. Okay. Okay, so not sure what is the issue. Okay. Let me quickly go to probably 2 more functions. Invoicing, compare, PO should be created before supplier invoices received. So you just do a comparison of date, compare PO dates against invoice dates, make sure there are no PO dates after invoice dates. Even a simple if formula actually works. Validate the quantities, receiving of goods, GRN, you can use an authentication check, you can do a match check. So this just to give you a perspective of what is possible. I'm sorry, I think the sheet is hung up, but I can at least explain what are the functions which you can definitely use. Correct. The next thing is from invoicing standpoint. I think I just gave you a mention of it. Amount in PO should agree with the amount on invoice. So what do? You do a compare or you do a lookup normally. Correct. Here we can use an authentication check. various things like this. So just to give you a perspective on auditing procurement. I'm sorry, my Excel, I think, looks like it's been hung up because of the screen share, but maybe, probably I can share some more insights into this. Okay, the last section is what are a few practical tips on selecting or using analytics tool. Many of them keep on asking which tool is the best. Is this tool the best? I've heard of Idea, I've heard of Tableau, I've heard of ECAT, I've heard of ACL, I've heard of Power BI. So each tool has its own perspective, correct? For example, Excel itself solves maybe 50 to 60%, but the problem is the steps which you have to do is fairly cumbersome. Then you have a tool like ECAT. ECAT is a simple tool where it comes like an add-on, you can do it. But the data should be in Excel. But when you're talking about larger data sets, you have tools like Idea, ACL, which can actually pull up the data and it can do it. When you're talking about dynamic visualization, dynamic dashboards, Power BI gives you that. Click, Tableau, all these fellows gives you that. So each tool has its own purpose. I think the focus should be on understanding the purpose. For a CA office, more or less, Excel plus a combination of the preliminary tools, I'm sure will be able to help us out. So what are a few tips we should keep in mind? You should be able to analyze the entire population, covering whatever is my engagement, making the data import easy. Most of the tools have it. Retain, it should allow you to join multiple files, relate multiple files, etc. It sometimes also generates an audit trail. This tool also has it, one of the options which is there. It helps you for accessing data. It should require minimum IT support. Now, I just gave you an example. Sometimes I always function where one function is. So what I do, I just right click, search and run. A simple thing like that. Even Excel has that option where you can go click on the functions, type on the function, you will get it. Correct? So it makes it easy for us. Somewhere you have read goal seek. I want to use goal seek, but you don't know where goal seek is. You can just search on top and it will tell you where it is. So it should be fairly simple, and it should be able to automate your audit tasks. So that's something which you have to ensure that you always focus on. Okay, so that's basically about my session. A few more sessions where I've spoken on analytics, a whole lot of these things. You can probably go into any of these YouTube videos. You'll be able to get this information. And a quick view about us. We are basically Ken & Co, a Bangalore-based firm. And, we basically have been enjoying analytics as a journey. It's been pretty exciting. And we also spend time in some bit of technology-driven services. Okay. And one last thing, many of them ask, in technology, can you do various services? Yes, this could probably be your menu card of services, and there's just one small list. You can keep on adding much more, just to give you a potential or a view that, there is a business opportunities other than the traditional domain as well. Even though traditional domain is always a bread and butter, there are interesting things which are actually coming up, but you need to stay invested. It's like your equity market. You put in sowing the seeds, it takes a good amount of time, and you'll be able to achieve the success. On that note, thank you so much. I'll be happy to take questions. I hope I gave you a perspective and thought process. What is analytics? And I gave you a lot of practical insights. I'm hoping that you make good use of it. Thank you.
Thank you, sir, for insightful session.